Welcome to Anytime Learning Inventory Control Processing. If you haven't already, please be sure to download the course material, which contains the course reference guide and case study, including a starting data set and import files. You will find review quizzes in the course reference guide, which are the same as the exam crams you will find in your profile. After completing this topic, you will be able to perform inventory control processing to receive inventory arriving from vendors and to ship items that have been placed by customers. We will also discuss how to reduce inventory items for internal purposes, adjust inventory quantities and/or cost values, transfer stock from one location to another, and process assemblies of bill of material items. You will also be able to perform periodic processing functions, such as update the system using the day-end processing routine, process physical inventory counts, and perform period-end maintenance. In inventory control, you can use the receipts icon to enter and post item receipts, receipt returns, receipt adjustments, and to complete prior incomplete receipts. The receipts icon is typically not used if the purchase order module is integrated because, unlike purchase orders, the inventory control receipts icon does not generate or send vendor invoice information to accounts payable. Therefore, if the purchase order module is integrated, receipts are entered directly within that module. Inventory control allows items to be shipped to and returned from customers. If the order entry module is integrated, the shipments icon is typically not used because inventory shipments do not send customer invoice information to accounts receivable. If the order entry module is integrated, shipments should be entered directly within that module. Inventory control also allows transactions to be recorded that remove items from inventory for internal purposes. For example, a furniture store may want to remove a chair from inventory so they can put it in their customer waiting room. Internal usage transactions post to a previously defined usage account to correctly post the accounting transaction. For example, you might post the removal of the chair to an office expense account rather than the cost of goods sold account. The adjustments function allows you to change either the cost associated with items or the quantity of items in stock, or both at the same time. For example, to adjust the quantity and cost of an item that is damaged in the warehouse, or to make quantity or cost changes when performing a physical inventory count. If either LIFO or FIFO costing methods are in use, adjustments can be made to a specific receipt bucket. If multiple locations are maintained in inventory control, items can be transferred from one location to another. Inventory control also supports a goods in transit location to track goods that are in transit from one location to another, such as on a truck or ship. Additional costs can also be added to items during transfers to account for costs of shipping the items, for example. When transferring items that use the LIFO or FIFO costing methods, inventory control creates a new costing bucket at the destination location. Item assemblies are used to assemble a master item made from multiple component items, defined in inventory control. The component item quantities are removed from inventory and the master item quantity is increased. In addition, fixed and/or variable costs can be factored into the overall cost of the finished goods item. During the assembly process, Accpac verifies there are sufficient quantities of the component items in stock to assemble the required amount of the master item. Items can also be disassembled if necessary. Let's take a look at each of these processes, beginning with receipts.